There's this big expectation of this inflation going to go running away, and the reason gold's going up is because we're going to have all this inflation. There is absolutely no evidence of that on a global scale. In fact, Europe is going to be struggling to stay out of recession by next year. When you take a look at what's happening on a global basis, you've got central banks have cut rates 88 times already. Take a look at what's happening with monetary liquidity. That's increasing. Those are all disinflationary trends that will feed back into the U.S. So as we continue to migrate out of that pandemic-based stimulus that created the inflation that we had, that's continuing to work itself out of the system. And now you're going to have this disinflationary wave from a very weak European environment coming into the U.S. That's going to play against yields at some point here. I think the real thing that out of the box, non-consensus trade that's going to occur is a rally in the dollar, because as economy slows in Europe, money's going to start to migrate back to the dollar to store reserve currency. And that's going to give a boost to the dollar because, again, there's a very, very large short position against the dollar. That could be the non-consensus trade that nobody's betting on right now. Even Yahoo Finance this morning, nothing has displaced the U.S. dollar as the world's favored reserve currency, but investors are giving it a shot. Gold's epic run-up coincides with threats of financial turmoil. Instead of competing alongside the dollar in longer-term bonds as places to park your money until trouble passes, gold's rise lays bare the downgrade for other financial shelters. If gold has taken its eponymous metal, there are the losers who have lost the competition, and that's been dubbed the debasement trade. This has become even a mainstream narrative, which is always interesting because mainstream narratives never tend to turn out right.
I think all this dollar interest, when the fiscal stimulus was massive, when inflation was running high, some of that dollar debasement talk was a little more legit. Now I think what's fueling the dollar debasement is purely the price of gold. First of all, technically, it looks like it's basing. It formed a double bottom. It's starting to break above its resistance line. It's starting to look technically like it could start appreciating. My growing concern is that a dollar appreciation gets out of hand, that it starts going quickly. The dollar can be debased, but for it to depreciate against every other country, that they're selling dollars and buying all those other currencies. Are their economies better? And at some point, I think the dollar has either gotten there or will get there where the answer is no, we'd rather be in dollars. And my concern is that we get a very swift uptrade that can really upset the apple cart, especially in gold, in Bitcoin, in some of the high-flying crypto stocks that don't care about the dollar, because that's the speculative trade.
That narrative will change if the dollar starts to rally, because if the dollar's rallying, then it's not debasement anymore. At some point, there's such a huge short position behind the dollar that all of a sudden people begin to sell other assets to buy the dollar because now it's the asset that's going up in price.
Catch me daily on The Real Investment Show. The link is in the description.